Well, as Europe continues to wrestle with its sovereign debt and banking crisis, the Reserve Bank here was keen to distance Australia from the mess. Assistant Governor Guy Debelle says Australia is well shielded from the funding pressures facing Europe's banks and better equipped to cope with the extreme market volatility. Here's Philip Lasker.
Those losing sleep over the turmoil and uncertainty plaguing the global economy are in good company.
Well, I get kept awake every night by volatility, so...
Is that just because you have to watch the market?
For 4 years now, actually, so I wouldn't even pick the last few months.
Whether those sleepless nights continue may depend on whether this weekend's meeting of eurozone leaders comes up with a credible rescue plan.
In Europe as to whether they can put together a rescue plan. I think the situation is going to come to a head in Europe sometime in the fairly near future, one way or the other, but I think that's completely unpredictable because ultimately it's a political decision.
And now that the market panic has subsided, the politicians, in Germany at least, are busy hosing down expectations.
These sovereign debts have been built up over decades and therefore one cannot resolve them with one summit, but it will take difficult long-term work.
In the meantime, ratings agencies continued downgrading eurozone members and their banks. Moody's downgraded Spain, citing vulnerability to funding stress, and some fear France could be next.
The French Republic and their policy is not able to find a solution common with Germany to have a clear solution, a long-lasting solution for the eurozone.
The cost of bailing out the banks might cost France its AAA credit rating, and Standard & Poor's cut the ratings of 24 Italian banks because of the higher funding costs they're likely to face. Was it any wonder the Reserve Bank was busy shoring up confidence in Australia's banking sector?
We are not seeing any of the same sort of stresses for the Australian banks that are present for some of the European banks. The Australian banks' funding structures are considerably more resilient to periods of stressed markets than they were previously, given the changes that have occurred over the past few years. So I think we should at least take some comfort for that.
Also comforting was the latest economic assessment from Deloitte Access Economics. It expected the real benefits of the resources boom to cushion any blows from Europe.
Remember, growth in Australia didn't depend on families spending that much more or a lot of those confidence-related things. It comes down to China's impact on Australia and in particular those enormous resource projects in Western Australia and Queensland. That's where Australia's growth is coming from this year and next, and so far that looks a pretty solid bet.
Yet many expect the RBA to cut interest rates next month. It could be that inflation isn't the only consideration. The need to cushion the banks from higher market interest rates might also be a factor.
We always keep an eye on that sort of thing in our monetary policy deliberations.
Now it's over to Europe to see what the politicians come up with.